what I intended on doing. Okay. All right. So the second part of this, being able to use structure as an ally, and we kind of stole the thunder from the second bullet point here in the agenda. But you have to understand that's exactly what structure is. It shouldn't be treated as this boogeyman, right? And the other question I was going to ask, what is another form, or is past price, can past price be considered as a form of structure?
Yes.
Absolutely it can. Absolutely it can. Because if price takes a downward turn here, I have to rely on this level of structure to grade whether or not this is an entry point at this here. So if price breaks through these levels of structure, right, and this here, this line of structure is acting as a pretty satisfying or a pretty determined line of structure here because of so many points here where price touches this line, you would have to assume that if price comes here, and because price rejected at this line of structure so many times, I would have to assume if price broke this line of structure that price has momentum. Yes?
Yes, sir.
So that's why it's important, and I want to go ahead and I'm going to clear this. That's why it's important to be able, when you decide that this looks like a pretty good pair, to consider the trade. If you're having problems recognizing here where those significant points of structure are, remember, we can just go here to the line chart and we could just mark these sharp points of rejection. And we have, if we've done that, we have shown that this is a reliable line of structure, is it not?
Yes, sir.
Okay, so let's see here. Go ahead. That got that. I'm going to do this. Okay. So let's go back to candles here. So now we have these lines of structure marked. And we probably want to go ahead and put a line of structure right underneath. And this area is probably overkill with these lines. But I want to be able to mark it so you can see significant lines of structure. So because I've been able to identify, as a matter of fact, we want to go ahead and mark this part here. So because I've been able to identify lines of structure, then now I can use these lines to help me with entries and exits. Yes?
Yes, sir.
So now I already here, this is what? If I'm going to use the fib, then this line would be the what? The area of what? This area right here would be considered the area of what? Continuation. Yes, sir. Okay. So I want to, and we are businessmen and businesswomen. We do not want to miss opportunities. So we're going to go ahead and do an EP here. And that EP is going to be GBP USD EP for a buy is 1.35857. 1.35857. Okay. So now what have I done here?
Last night, you mentioned, I think, yeah, and it just stuck in my mind. I think you phrased it, it was dealing with setting an alert, but you wanted to make sure you set it high enough where if
For the false breakout.
yeah, for the false breakout. Is that a field judgment on experience or?
Yes. I don't. The only other thing that can help you with this is if we take the fib here, Richard, and move it up here just to this boundary here, right?
Yes, sir.
And if I want to use this, and if you look over here to the right where that EP is, it's pretty close, right? So if I wanted to use this as a tool, then I would say, hey, I don't want to get in this trade until it breaks here, right?
Right, got you.
Okay, and if you see here, let me put a horizontal line here so you can see. If you see here, we're pretty at eyeballing it. We're pretty close, right?
Yes, sir.
So to answer your question, is it about feel? Yeah, and experience after doing this. Getting ready to go on 9 years this year of trading. You just get a feel for it. Now, I will tell you this: I am not an AI guy. Forgive me for being one of these conspiracy theorists on that. And I might sound like a blooming idiot, and maybe I'm missing the boat. But I will never, and never being an absolute, I will never use AI to trade. The day I have to rely on AI to trade is probably the day when it's time for me to do something else. That's just me. That's just me. And you know, when I get to Raleigh, if somebody wants to ask me that question, why, I'll tell you. But I've had, in our fund, we had a security breach, and I just do not want to rely on an electronic device with my trading and somebody breaching that bot and getting access to my information. Is it still possible here? Sure it is, but it's less likely because there's less. Like, for instance, when I would be on stage and I would be playing, there are some guitarists that would use the wireless connection to the PA or to their rig. I never did that because if I just plugged in directly, y'all follow what I'm saying? If I just plugged in directly, there was almost no chance of me losing connection. And the only way for me to lose connection or to have interference in the signal is for me to disconnect. Y'all feel me on that? Now I know that there are some people that fall on their sword with AI. Hey, I dig it, but that just ain't gonna be me. It's like, Derek, you really overreact when you hear about a storm. You know why? Because I'm never going to be that guy on the news that they see. It's always those people that have to come and get, right? Y'all ever see that?
Yeah.
Okay. You ain't going to never catch me in one of them boats, ever.
You're not going to be standing on the roof.
No, I ain't going to be standing on the roof, Richard. I ain't going to be standing on my back porch. I ain't going to be doing none of that. You ain't going to catch me standing on the rooftop of my truck, none of that. Because I'm going to take precautions, and if it comes down to me getting up, I'm going to be watching that stuff from Dallas or Las Vegas or North Carolina, if y'all hear what I'm saying. And that's how I feel about AI. You ain't never going to hear, did you hear that Derek, they got Derek for $1 million, $2 million? You know, yeah, he was using one of those AI bots, and then they hacked it. Don't tell me they can't. Don't tell me they can't. So I don't mean to go off in that black hole of conspiracy theorists when it comes to AI bots. So, I mean, that's just my opinion on it.
I feel you.
You know, there's a lot of things out here looking for your money when it's digital. I'm not going to give them more access. Ain't going to happen. So here, number 3, all structure is not equal, or I should have put created equal. So let's look at this, right? So this is a level of price rejection. Yes.
Yes.
So is this level of price rejection equal to this? Is it?
I would say no.
What'd you say?
Show the first one
Here to here.
and then second one.
According,
Oh, go ahead, Tim.
I was just saying, according to the line, it appears that they are. But
Let's see. Kim, what do you think? Are they equal?
I'm still trying to figure out which one was the first one. That's what
I said, is this
uh,
equal to this? They're both areas of price rejection.
oh, okay, no.
No, they ain't equal. Because here, price rejection here, right? So this line comes down to here, 16 pips. Here, this is just consolidation. And not only that, this is telling me that this downward movement is over.
gotcha.
Yes, sir.
So when I'm looking at price rejection or putting a line of marking structure, well, if I'm marking structure, let's look at the line chart. See this sharp line here? And this is round.
Yep.
Y'all feel me?
Yes, sir.
Remember, the sharper the rejection, the more money that's here. Now, some people might think that's, picking that shit out of pepper, but it's important. Why is it important? Because if price comes back through here, which it will, I have to determine where that significant line of structure is. This is not a significant line of structure. This line is marked by this area of rejection. It's not marked by this one. It's not marked by here. It's not by... Y'all follow what I'm saying?
Yes, sir.
So, well, Derek, if consolidation is a form of structure, then why isn't this line here? Well, again, price itself is dictating where that strong point of structure is. None of these are strong rejection points. These are more round. So I know that there's consolidation. I could look here just looking at the line. Consolidation here, right? Former consolidation here. So it's important because it's important to know this. It's important to know this because when you're deciding where my entry point is going to be and my exit, I don't want to get in the trade too early and I don't want to get in the trade too late or get out of the trade too late. Yes?
Absolutely.
There's no need if I've secured 30 pips, right? And I'm coming off a shady point of structure and you're not sure, there's no need of giving the money back to the broker because you're trying to stretch for another 5 pips. Hence the lesson, the part of the lesson last night that Kim was given. Don't be a hog. Don't be a hog. Hogs end up in the packages of bacon and sausage at the grocery store. Y'all feel me?
Oh, yeah.
I don't want to be that dude. I don't want to be on the shelf in a packet. I want to be kept as a house pet. You understand? I don't want to be the package of bacon.
All right, Wilbur.
I'm just saying, you call me whatever. At least I ain't in that package. I ain't going in that truck. Oh, here come Mr. Gilmore. He ain't come to get me. He ain't come to get me. And the danger of ignoring structure. So when we're looking at the danger of ignoring a structure, you will also run into the what? The power of structure. You understand, Kim, what I'm saying? When you ignore structure,
Yes.
you will run into the danger of structure. So here's a rule. Y'all listening? This is a very important rule.
Yep.
If you're in a trade and you're coming up on structure and you're having a question whether to get in or get out, get out. Get out. If you don't understand, but before I get out, what might I do, Kim? Before I get out and I'm coming up in the area of structure, what might I do? Well, I can set a trailing stop, but if I'm coming up on structure, like this right here, if I, and I want to, and David, I want to have that question answered or that action determined before I get to structure. But Derek, what do you mean? Well, let's take a look at this price movement here. Currently, here's price. And if price is going to continue in the upward movement and I'm coming up on structure, especially this bad boy, the H4, right? Then I want to do what? I want to look to the left. And when price got here, it rejected. Not only that 1, 2, 3, 4 past periods in this area, because there's more than 4 past periods, but in this area, 1, 2, 3, 4 past periods in this level of structure all rejected or respected the area. So unless I have an incredible amount of volume coming with me, and at this point, David, this is why I say I want to have that line of action already determined. Because if you don't, then this is where your discipline, if it's weak, will fail you. If I'm coming up from here and I get up here and I got 52 pips made, I'm going to go ahead and put my trailing stop in at that point. And if price carries me here to yesterday's high, then absolutely hallelujah. But if him don't, right? And if him don't, then I'm at least have executed what kind of trade?
Risk-free trade.
Risk-free. Y'all feel me?
Yes, sir.
Now, Kim, here's an advanced question for you. If I get up here, or if price is coming here, right, and I see price here, and I'm deciding that when price arrives here, I'm going to put in a trailing stop. What's the other thing that I could probably do along with that? I'll help you out, Nick. Along with that, what else can I do?
Take profit.
Well, I could take profit.
Huh?
I'll give you a little bell for that.
Okay.
Okay. But that's not really. Now, look at past price. What else could I do?
So the price is past the H4 resistance. Is that where you were at?
No. I'm saying as price is arriving, I have decided that once I get to the H4 up here, that I'm going to put in my trailing stop. Along with that, get to the left. What else could I do?
Oh, another position. Well, man, I see you got that. Yesterday's high is respecting that area.
So if I had 2 past positions here, now I'm going to go ahead and put in my trailing stop here. But what I could do is set a TP here.
That's it.
You didn't say it like that.
That's why I was confused. I said set a TP. Okay, I got you.
Did you say that?
Yeah, did somebody
Okay,
else
if
hear?
you said that, okay.
I heard you, Kim. I heard you, babe.
Okay, thank you.
She said TP.
She did say it.
Because I was running out of answers. Okay. Yeah, thank y'all.
Did you say where? Because I'm gonna repost. I'm working on. I'm gonna edit this and I'm gonna post it and I'm gonna listen to this part again. Did you say set a TP here?
I said set a TP, but no, I didn't know you wanted me to tell you where.
Okay, so you didn't.
No,
You said
said,
set a TP. You didn't say where.
No, I didn't. No.
Okay. Well, that's why you got a little
bell. My answer.
That's why you got a little bell. But y'all, y'all listen to me for a second. And you cannot miss this. Those type of things are what makes really good traders master traders. You have to be certain here. And yeah, I'm nitpicking at her. She could take it, but she says, I want to be a great trader. I want to be a master trader. Master traders don't miss this. Just because she said it, don't mean, well, where's she planting a flag at? Y'all feel me? Because, all right, that's another 15. Let's round it up. That's another 16 pips. Well, if you got a $10 lot size, that's another $160. You don't think that's a lot of money? Then give it to me. Give it to me.
Yep.
And Derek, on a GBP pair, the likelihood of it wicking that high is on the greater side.
Yes. That's a really good point. And so now that's coming from a guy who's been trading for a while. And this is why I say to you guys who haven't been trading that long, you have to study these charts. You have to be nitpicking. But let me hey Kim, let me stop you right there. Those of you who nitpicking over shit that I don't study, that I don't teach on, you wasting your time. Because this stuff right here is what you have to master first. When you're learning how to drive a car, is anybody going to drive a car 140 miles an hour without learning how to brake? That's kind of really ridiculous, right? I want to drive fast, but I don't know how to brake. Well, I probably want to learn how to brake before I put my foot heavy on the accelerator, yes?
Yes, sir.
Because master traders trade like this, right? Or they trade like this, right? They don't trade like this. Y'all feel me? And some of y'all are trading like this. Y'all feel me on that?
Yes, sir.
All right. Any questions? Nobody has any questions?
I have a question about.
Hey, Nikki, how you doing, ma'am?
Good. How are you doing?
I'm great.
Good. I had a question about you saying the location for where you set the TP. Above the supply box there.
Well, no. Hold on.
Is that where you said?
I said right here, right at yesterday's high is probably where I would. As a matter of fact, Nikki, it would probably be right above this dude. Only because, I don't want. Oh God, lead, Nikki. I'm gonna give you this. I'm gonna give you this. And the reason why I'm doing that is because this is a very, very important point. And then I'll let you finish with your thought. But just give me a second. So, yes, price showed that it could go here. But what if price repeated this and never got to your TP, right? But in this scenario, we activated a trailing stop here, so we're good. But, I mean, I don't want it to get here and reject. I want to get as much money as possible. So if I see these 2 points, Kim, you feel me on this? If I see these 2 points here, I'm going to set that TP at the shorter of the two.
Yeah.
Yes, sir.
You feel me on that, Nikki?
Yes, I follow.
Okay, go ahead with your
Gotcha. That's what I was trying to understand, like the reasoning behind where you were going to put the TP. I missed that. Okay. I didn't understand.
So as we made the decision that we have several points or several past periods where price respected the H, we have made the determination that we're going to set a TP here. I'm sorry, a trailing stop here. We're going to set a trailing stop here. However, we also have seen in the 2 previous periods where price wicked past where the TP, where we had the trailing stop. So in this case, I'm going to set the TP here at the shortest of the 2 points. Why? Because of the fact that I don't want price to get here and reject before it gets to my TP. So I'm going to take the shorter of the 2 points. And I don't think we've ever talked about that particular scenario. Y'all feel me?
Yes.
Yes.
Yes, sir.
Eric, it's really not a question, I guess. be in the back of my mind, maybe some other people's mind, where you set your TP, but in the back of your mind, you're thinking, well, what if it keeps going? If that's the situation, you just take another position.
Hold on 1 second. Let me answer your question just a second. 1 second, Richard. 1 second. 1 second.
I'm a country boy. Hey, I'm reading that. I'm reading my book now. So that question of psychology.
Listen, and I get it. It's really hard. It's really hard, right? In this, it's really tough in this area to have your discipline. It's tough. I'm gonna admit it, because every now and then I get out of my mind myself. But I'm not concerned with price moving up here after I've secured, 40, 50 pips.
Hey, Derek.
And I'm sure, Richard, that with your account at this point, 40 to 50 pips is a decent amount of money. Yes?
Absolutely.
Okay, so why would I risk?
It's going to always be a decent amount of money.
Right. So, y'all hear what he said? Basically what he said, it doesn't matter about the amount. It's always a decent amount of money, no matter what. But in this case, we want to concentrate on the pips. If I secured 50 some odd pips and I think price is going to continue and my trailing stop or my TP kicks me out, then what am I looking for then? If you believe price is going to continue, then I'm looking for another what?
Entry point.
Another entry point. That's it. And then, there's risk management involved in that when you're looking at now price is overperforming at this point. And then there's some other things, but that's a different class. Good job tonight, Richard, Greg. Good job tonight. And Nikki, that was a great question to talk about this particular scenario as well.
That was an awesome question.
So anyone else? And see, y'all, this is why I want, if you have a question, you don't know how powerful that question is.
I got one, Mr. Taylor.
Go ahead, man.
Up there in that area too, isn't it possible that there's some sale orders waiting to be picked up?
Yeah, and you're absolutely right. Now the question is it going to be enough to make this disappear? But I guess the question I would ask you, if I'm making a charge to this area, what's my risk here? Because price is what at this point?
Overperforming.
Yeah, it's overperforming at this point. But David, I know that you could recognize increases in volume, right? So if you're able to recognize increases of volume and price pops here, then your level of risk decreases, even though price is overperforming. So, hey, if a candle like this pops out of here when price breaks out here, am I tripping at that point? No, I'm not. But even though I have volume, price is still what? Overperforming. So what might I do, ladies and gentlemen, as a form of risk management? What might I do at this point?
Half the lot size.
Half the lot size. But to answer your question, yes, sir. You're absolutely right. But, David, you have to also recognize the risk. Yes?
Yes, sir.
Okay. Anyone else? Like this class tonight, y'all. Like this class tonight. No other questions? We good? All right. Outstanding, everybody. Great class tonight. Great participation. I love it. All right. And we're going to move on to tomorrow from structure. We're going to move on. But even though structure won't be the main topic, structure always has to be in play, yes? I mean, I really can't, take an upward trend or a downward trend without having the discussion about structure. Yes?
Yes, sir.
Yes.
Structure and volume together is like air when it comes to trading. I need both to be successful, or at least I need to be able to recognize structure, okay? So I guess one more question about structure, and then we're going to get out of here. And somebody, please, just be honest with the question. Why do we trip when we see structure? Why do we trip when we see structure?
Fear of missing out.
What else, somebody?
I would say we don't really understand structure
Okay.
and what it means.
I like that answer. See, because some people don't understand what it is that they're looking at. Well, why is that box there? And what's it doing, right? Or why did price come up here and reject? And what does that mean for me? So for the price action class on Saturday, we're going to get into those psychological questions about structure. Fair enough?
Yes. I think also, Derek, sometimes when you say all structure is not the same.
Right.
Sometimes it can throw a curve.
What can help us with structure not being the same? What can help us?
Look to the left.
Yeah, there you go. There you go. Yeah. If I look to the left and I have, like right here, we could tell looking to the left that this line is significant when it comes to structure, yes?
Yes, sir.
Look at all these, look at all these periods here that respected this line of structure. So if I'm getting up here, I have to look to the left. So I know that with all these periods respected this area, I ain't getting in no trade until price passes here. Not even thinking about it. Y'all feel me?
Absolutely. Yes, sir.
Yes.
So if I see all of this, then I know, hey, I gotta wait. Y'all, I'm
That's what
telling you, as an individual, each individual, y'all get an understanding of the structure. A year from now, your life is totally different. And there's quite a few people here who still have problems with structure, and they're gonna hate they missed this class.
Very
This
good.
class was awesome, if I do say so myself. All right, let's get out of here. Y'all have a good night, and I will see y'all tomorrow night. Y'all be blessed.
Yes, sir. Thank you.
Thank
Good night.
you. Good night.
Yes, sir. You too.
Good night.
Good.